Good afternoon, ladies and gentlemen. It's my great joy to be back in Delphi Economic Forum and to be back in person in Delphi Economic Forum, and also to be moderating today's panel regarding the future of finance. One question, one vision that is very important, and the vision that will set the stage for a lot of changes in a number of areas that are directly and indirectly related to finance. Just to give you an example, imagine we're swimming in the ocean. It's an ocean of information and an ocean of possibilities, but at the same time, imagine a cuttlefish dropping ink into this ocean, hindering our visibility and limiting our perspective. So for the next 30 minutes or so, our esteemed speakers will help us guide through the ocean, will help us navigate and clear the environment, and hopefully by the end of the panel, we'll have answers to some of the questions that are related to the future of finance. We all understand it's a huge topic. We could be discussing this topic for hours on end, but hopefully for the next 30 minutes and after the next 30 minutes, we'll have a much broader and clearer idea. So without further ado, I'd like to welcome our esteemed speakers, starting from my right, for the far right to left, Mr. Costas Mitropoulos, the chair of the investment committee of LATSCO family office and a seasoned banker with a number of years of experience in the field. Mr. Tryfinopoulos, the head of strategy of the Hellenic Financial Stability Fund, and Mr. Pavlos, Konstas, associate partner of enterprise agility at IBM. So welcome to the panel, and let's kickstart with Mr. Tryfinopoulos. I'd like to set the stage, and I'd like you to set the stage actually, by discussing the key trends that will play a key role in the financial world. A lot of things are happening, but which are the mega trends? Which are the key trends? What do we need to have in mind to start our discussion and to start our journey into this new world?
Hello, thank you for the invite. My personal view is obviously that we have a lot of big trends right now, right? The world is changing rapidly. However, we need to focus on some mega trends. One mega trend is obviously the energy transition, and why is this relevant to finance? This is relevant to finance because the whole transition is going to be financed by funds and banks, obviously. So the finance has to play a role. Which are those targets and how this will happen and by when it will happen to meet the net zero emission targets. That's going to be a major driver for the financial ecosystem going forward. A second one is obviously when we're looking at the capital markets and access to investment opportunities as consumers and individuals mainly. This multi-option offering, if we can say, in terms of product and services right now, and that you can be based here and you can invest everywhere in the world. You can be based in Africa, you can invest everywhere in the world. Give us a lot of different options, and basically we are shifting from a savings kind of narrative to investment narrative. So if we pick up and say in 40 years time frame, we will see that someone who was saving 10K 40 years ago will make about 50K. Today, if someone invests like in broader equity indexes, we can make 800,000K. So this changes the behavior of how people see and invest. And the last one, I think, is like that we are going to see the banks, and not only the banks, the funds and financial services, investing to real innovation and companies and startups, which will drive pretty much, the net zero again, but not only the net zero, emission agenda, but they will solve problems. I would pick those three. Obviously, there are lots of others like digital transformation, but I think we can talk about that later on.
Well, thank you very much for Mr. Tryfinopoulos for these personal views that were, I guess they put us right into the stage. So before moving to the next question, I'd like to ask both panelists to comment on this one, so to make it as much lively as possible. So far ahead.
Well, I would say that what's also changed is the ability that the normal type of investors, now they have access to tools that before they were considered elitists. So to give an example, when someone would invest in a pension fund 2 decades ago, they wouldn't have a say on where their money would be invested. They wouldn't be able to guide their portfolio, which obviously now changes, and you have all of these microservices and different players in the financial markets ecosystem and the broader capital markets ecosystem that gives flexibility to everyday users to have access to financial instruments that before they would only be available to certain few that would have the capital gains that you just described. So I think this is a major trend, that democratization, let's say, of finance beyond corporate and big corporate and investment banks in that sense.
What really makes a lot of sense, and that adds up to what Mr. Tryfinopoulos said. Mr. Mitropoulos, before moving to the next topic, you have something on the mega trends?
Yes, I think the future of finance is the future of more choices, there is no doubt. It's going to be driven, and I agree with George, it's going to be driven to an extent by the phenomenal requirement to adjust to a net zero CO2 economy around the world. There is a question in my mind whether there will be ample opportunities to invest to match the appetite for investment. You know, whether there will be good projects around, except the CO2-related projects, to fill in this appetite. But it's a future of choice. It's a future of running ahead fast.
Since we are on the talk and the discussion of future, let me be a little more provocative here and ask about the banks. What do you think, and I'm starting the question with Mr. Mitropoulos, what is the future of the banks? Will there be banks in 20 or 30 years? And if yes, what form will they take? I imagine they will be somehow different compared to the ones we are accustomed to today. But what is your vision? What is your personal opinion of the future of banks in the next, say, 20 or 30 years?
Well, definitely, you know, banks are as old as almost humankind or civilized humankind. The first banks were in Babylon, so it's a long time. There are going to be banks, there's no doubt. The question is, what will be the new format of the banks? And if you move away from our legacy conception of the bank, as we all understand it, and look at the financial services, you can split the space into 3 compartments. One is a transactional one, and there is a revolution. You know, all new things are happening there, or most of the new things are happening there, and a new breed of institution is coming into the legacy banking space and commands it to a very great extent. The second part, the second compartment, is the very traditional one, the one that keeps deposits safely and gives loans against those deposits. This is the heavily regulated part, and this is the part that's under real pressure, and very few things are happening there. They are happening, there is change, but it's the bit that is under pressure. And the third part is what one may call investment banking, and a subset of it, shadow banking, whereas all the money, all the savings, the voluntary savings that are being channeled into equity and debt investment through non-banking institutions, the funds around the world, very lightly regulated, sometimes not at all, with innovations like crowdfunding and peer-to-peer funding coming in there. Now, how this battle between the 2 compartments, the transactional, let's say the traditional, and the investment parts will come to an equilibrium, I really don't know. There was a study by McKinsey, I think a few years ago, that it predicted that those that will find a new specialist business model will be better off than the universal type of legacy banks or the very local ones. So somewhere in the middle will emerge a new generation of banks. Where it will emerge and how this type of bank will consolidate its position in the market, I will not attempt to predict.
Okay. Mr. Konstas, I believe you are strongly opinionated on this one, so I'm looking forward to your points.
I am, and first of all, I don't think there is a question on whether banks will cease to exist, but it's mostly what form will they have. There are no data to suggest that there is a major shift in customer behavior when it comes to choosing financial providers. In that sense, in the UK, HSBC, Lloyds, NatWest are still the largest mortgage providers by a landslide, and that's because they have huge balance sheets and they can afford basically to have such an exposure. However, I think that the role of these institutions in the future will definitely change, and in my opinion, this is anchored around the concept of beyond banking. So banks should go a long way to be these value orchestrators for bringing these end-to-end solutions, basically, that they are going to solve customer needs. And in that sense, that goes way beyond offering a mortgage or a credit card. So if I take an example, if we have a customer that wants to buy a house, I think everybody could relate with that. If there was a bank-powered platform that would allow you to sense-check demographics to understand where you want to live, find the best possible deal you can find in terms of purchasing a house, then finding the best possible deal in terms of mortgage and rating, and then helping you complete the transaction with all the legal and financial checks that need to take place, everybody would jump at it. And there are these kind of startups and a proof of concepts in the market, but there is nothing scalable. So I think the banks need to start building these ecosystems around them. And actually, I think that's a point that shows that fintech could actually be part of the solution and not a threat to the banks, because building these API-driven platforms that different contributors would solve part of the customer journey and provide that end-to-end customer need would go a long way. And one last thing is, why are banks best placed to do that? Arguably, they own all our transactional and financial data for each of us. So by penetrating this data through mega data, big data analytics, they would be able to know what we want before we want it. So they're best placed to be these orchestrators, but I don't see them as these monolithic institutions that exist today.
So we've more or less agreed upon that there will be banks in the future. However, I understand that they will require transformation in multiple levels, and that's my next question. How do you view the transformation in the banking system? And I'm not only referring to the technological aspect. We understand that technology is changing, things are moving forward, so banks do need to follow up on this one. What about the mindset? What about the people? Because it's a two-leg process. On the one leg, you have the digital transformation aspect. On the other hand, you have upskilling, you have reskilling, you have the people who need to transform as well. So how do you see that happening, and what challenges do you see in the process? Starting with Mr. Konstas and moving onwards with the other speakers, because I have a feeling that you have very strong personal opinions on this one.
Well, I think, first of all, we need to understand why financial institutions have been difficult to change and evolve, right? So financial institutions have been built to provide three things, which is predictability, assurance, and reliability. And at least in principle, or to some extent. So they build entire business models that are basically designed to predict future based on past activity. However, now, we can make decisions based on live data. We don't need to rely only on past data. However, these structures have created these layers upon layers of complexity and legacy of technological and organizational sense, and they've resulted in that conservatism, let's say. So I think that turned into a culture that made it difficult to fail, made it difficult to make wrong decisions. So apparently everything becomes a priority because nobody can make a decision to drop something. And that has been what we've seen shifting in financial institutions over the past decade, to become these agile organizations that they don't fear failing, but they try things out and they pivot instead of going one direction. And because they did go that one direction, it's so difficult to take a step back and reposition yourself.
Thank you very much on this one, and I'll get back to you regarding the change in culture. But before that, Mr. Tryfinopoulos, I would like your personal opinion on the subject of transformation and how this will evolve in the future.
I believe that digitalization basically, helps the financial institutions to build resilience in their business and operating models. That's number one. And which obviously has to do with certain things. We also saw that in a COVID environment, you needed to communicate to your clients instantly and remotely. So you needed to connect to your operations and back office pretty much with the front office. And that was crucial, and technology played a very important role of achieving this one. I think there is a magic word here, which is instant information that the technology and digitalization can provide, and what I mean is basically instant data collection, which helps you also to connect your workflows with the creditworthiness of your clients and monetize this big data that you have going forward. And I think you need technology, and obviously you need to be able to do it on your own and build a certain intellectual property around this by having the right people in place. That's crucial. So we will see more of this, and we will see more of this coming from the banks, but also collaborating with the big giants and fintechs going forward. Obviously, digitalization is also related to cost savings. That's a huge block. We have seen it in the Greek banking sector as well, where you streamline your operations all across and horizontally and vertically. So I would pick those ones, and I think in the future we'll see those trends emerging more and more, and we'll see that the tech companies or the fintechs will need to go back to Mr. Mitropoulos' point to decide whether they want to pass this regulatory hurdle and become more enter the in the core of the banking, let's say. Rather than staying outside of this and collaborating with the banks.
And Mr. Mitropoulos, I'd like to take advantage of the fact that you have been inside and outside of the core banking system. So I guess you can also have a clearer view of what's going on and what transformation aspects are required. So I'm looking forward to your opinion on this one.
Banks are process-driven organizations, and they also cover the full range of banking services, that they are complex by definition, by nature. And that makes them very difficult to change. They develop a culture of self-preservation, and that it isn't tuned to fast-changing and new modes of thinking and operation. The banks that will survive will definitely change, and digitalization is the key catalyst for the change. Is not what really drives change, but is one of the catalysts that accelerates changes throughout, not just from the customer interface to the final investment decision. There will be digital support for that. Now, whether the current banks, and I'm not talking about Greek banks, I'm talking about banks in Europe and the States and all around the world, they will be able to reinvent their own culture and become more entrepreneurial, more agile, and bring in the right sort of people to interface with the digital, because somebody has to interface with the digital. I don't know, there are two ways of looking at it. One way is the new generation of banks, of let's say fintech banks that have appeared, and they are becoming banks, and eventually they will grow, and they are built totally differently from the existing banks. Not only they are built, they have been conceived by different people. They are built differently. They operate in a different way. They are fast, sometimes faster than they should. And there is the other end of the spectrum where global behemoths like JP Morgan, they try to become different by endorsing technology as the internal catalyst to change their way of thinking. If I could venture, not a prediction, but a partial view of the future, some of the large universal global banks will take the JP Morgan route. Some will split into smaller pieces, and a new generation of totally different institutions that serve part or the whole of the banking services spectrum will emerge. The likes of Revolut and N26, which now reside at the transactional side of the spectrum. I'm sure they will venture into the real banking world in the medium future.
Thank you very much, and I can foresee a lot of change, a lot of transformation coming, but I'd like to get back to the elephant in the room, which is no other than regulation. Traditionally, regulation comes after the fact, but how different and how further from the fact does it come now, since we're talking about a future that is rapidly accelerating? So in a sense, can the future of finance be regulated even after a certain time frame, or are we looking at a too late scenario after all? So starting with Mr. Tryfinopoulos, what's your personal view on regulation the future of finance?
Well, the short answer to this is that we'll need a regulator. We'll need to have regulations and policies, there, because financial sector and specifically banks preserve our value. It's a storage value system, right? So we need certain elements to be there, and obviously it's going to be always heavily regulated in order to guarantee, our savings worldwide. Going forward, what we have seen in the past, I think there are two kind of schools. One is that technology and innovation drives up more finance, and more product offering and services offering basically helps the economy to grow faster. So the more liberal, if I would say, we have seen that more of this obviously helps, but at the same time creates structural changes, and we need to consider those ones in the system. We have seen that during the 2008 crisis, global financial crisis, the more conservative the regulator, proxies, basically said that we need more regulation, and that actually happened. So we need more regulation, obviously, to have a system in place which is taking care of all of this. So we need to have rules. So I would say, in order to sum up, that we need to find the silver line, allow technology and innovation find their space, and make use of it. But at the same time, we need obviously. And I think this is also the regulatory standpoint of view, that we need regulators, and we need to have a prudential framework there in order to safeguard, the growth and stability of the system.
Mr. Konstas, do you agree with that, or no?
Well, I do agree to some extent. I think there are two questions that we need to answer to make sure that we are assessing whether it's too little, too late. First of all, I would say, what is the role of the regulator in the future, right? And second of all, is how would organizations such as traditional banks engage with their compliance and legal teams in product innovation? So first of all, when we're talking about the regulator, I mean, the financial market interactions have been built on the assumption that there is a central authority that basically builds the trusts that's needed. And it safeguards the integrity of the capital system, right? So this has proven a few times, more than a few times, that it is a reactive role. And sometimes the regulator runs behind the developments to try and safeguard that trust. But we now live in an era that we have decentralized technologies, such as blockchains, so that can ensure that trust is basically distributed across transactions. So that safeguarding of that trust is not an ad hoc activity that needs to happen with a lot of publicity and a lot of measures that need to take place at specific intervals, but to be safeguarded continuously. So what if there was a regulator-enabled blockchain system that banks would have to transact through to basically have that assurance, let's say, of trust? And my second point about bringing compliance as an integral part of product innovation, those responsible for translating regulation into policy, they need to be seen as co-innovators from the very beginning. I mean, I've spoken to a number of different clients, financial institutions, especially from stakeholder interviews, that there is that appetite for these departments to be seen as co-members in that journey. Sometimes there are two pathogenesis, let's say, that they're typical in financial institutions. One is that sometimes, compliance and legal is being seen as the traffic cops. So they are there to stop you and direct you where to go and tell you cannot do this and you cannot do that and you should follow that route, rather than being team members in that product development process. And the second of all, a number of organizations hide behind regulation to avoid make painful decisions or unpopular decisions. So there is a track to be balanced, and I think it comes back to my very early point that it's about customer centricity. So if customer centricity is the #1 matrix, the North Star matrix that organizations need to focus on, and if you engage these relevant departments from the very beginning, and if you walk the regulator through what you're trying to do rather than trying to explain later, it's going to be a much more straightforward process, because your goal would be to meet the customer need, and you'll find ways in a compliant way to create products that meet these needs.
Thank you very much. And your remarks, Mr. Mitropoulos, both from the banking side, but also from the overall finance side that also, I guess, needs to be regulated.
Well, the purpose of regulation is to prevent market failures and to minimize market distortions. So you need to have it, particularly in environments where markets are partly invisible or very difficult to track and trace. Now, the traditional regulation, the current regulation, is learning from its own experience. Therefore, it's by definition too late, or not too late, but late, and usually searching for the right response to the problem. It's not easy. It's very difficult to be a regulator these times. The second problem that current regulation has is that it applies to institutions and not to financial services. That bundles together a number of services under a single roof. And you're talking about the institutions. They look at the balance sheet of the bank, but within the balance sheet there are zillions of different business operations that take place, and they're all regulated in a crude mode. To cope with the megatrends that we started our discussion, regulation will have to shift away from ensuring resilience on the system to providing some room for the system to become more agile and cope with the speed of the future. And I think that there will be two regulatory changes. One will be disaggregation. I think regulators will start splitting the balance sheets into the constituent parts of the bank and applying regulatory powers to those parts that are likely, in their view, to lead to distortions in the marketplace or to market failures rather than to the whole balance sheet. And the second is to start understanding the process by which banks choose their clients. That is the most important part that the regulator never touches. We're talking about bad assets, which means situations that have turned sour. But those bad assets are not bad necessarily. It's a bad choice of customer coupled with a possible bad or not so bad asset. It's the customer choice that makes the difference, and the regulator and the banks need to pay far more attention on how they choose customers as opposed to how they choose assets in which to invest. So these changes will come, and I'm sure that regulation will improve the agility of the whole financial system.
Thank you very much. It was a very fruitful discussion. I guess we all end this panel with a little bit more visibility regarding the future of finance, and hopefully life itself will come and prove us right. Thank you very much.
Please prove us. Yes.